So our topic for today is inflation. So what is inflation? In economics, inflation is a general increase in the prices of goods and services in the economy. If we say in simple language, inflation is the rate of increase in prices over a given period of time, and during this period there is also a decline in the purchasing power of a given currency over time. Now we come to the different concepts of inflation. So there are basically two types of inflation. Number one, it is a headline inflation, and second, it's a core inflation. So in headline inflation, it refers to the change in the value of all the goods and services which are available in the economy. Whereas in core inflation, it's a type of inflation where we exclude the prices of food and fuel from the headline inflation. Now we come to the importance of inflation. So inflation affects everyone in the economy, be it worker, businesses, the common people, lenders and borrower. For example, consumers need to keep a track of the prices of the items they purchase. When inflation is high, they need to spend more time shopping, looking for the best deals. Companies need to think about how much to raise prices as it becomes costlier to produce their products. Individuals will also act to protect their financial assets from the rising prices. Inflation can also be very hard for people on fixed incomes. Inflation means their income won't stretch as far as they could before, and people will have to buy less. If inflation is moderate, that means the prices are increasing by a little. They may have to cut back on non-necessities like travel, movies, or eating out. If inflation is high, they might have to cut back on necessities like utilities and food. The third impact of inflation will be on the long-run economic growth. It has been observed in various countries that there exists a positive relationship between inflation and economic growth. Most economics agree that if there is a little inflation of about 2 or 3% per annum, it is good from the viewpoint of an economy. If there is an hyperinflation, it may discourage saving and hinder the economic growth. Inflation in India. Inflation in India is measured using the wholesale price index. Inflation during the month of April was a record-breaking 7.7%, which is almost double the rate that the RBI must maintain for the smooth functioning of the economy. So the poor people of the country, who are also the majority, are facing the burden of this inflation more than anyone. LPG cylinders, which is a luxury for them, has alternative, but food it doesn't. The rising inflation of food items take away the purchasing power of the people, or they are forced to cut short their expenses. This is in addition to the multiple lockdowns that saw a massive loss of job. For a meal or two per day, families might have to sacrifice their children's school, postpone medical treatments of the family members, and give up on other expenses which might not be of much significance in the present but would harm them if ignored in the long run. When the rich are also affected by the record-breaking inflation in food and other essential commodities, the situation it is definitely not as severe as for the middle-class people. But if the high inflation continues, the consumer will not be able to handle that massive burden, which will lower the demand in the market. This decrease in demand due to lowering of the purchasing price of the consumer would further hurt the economy and the GDP of the country. In the long run, high inflation, if not controlled, will even hurt the massive corporations that are perceived as the pillars of the Indian economy. The high inflation is also hurting the people who have invested or plan on investing in fixed deposit and people who receive annuities from the money they have invested in secured options. These do not yield the massive returns that the stock market gives. When the younger generation is generally not inclined towards investing their money in these options, the people who use this option to save money for certain needs like a retirement fund are facing losses due to the higher inflation rates, which are a lot more than what a fixed deposit, for example, can yield. So this rising inflation is affecting the poor more than the rich. When the government has introduced relief measures for massive corporations, it is not a long-term solution. India needs to have a devised strategy that helps the poor negotiate inflation when correcting measures to curb it is launched.